this is what they reach for. Now, the headline: DTCC, the legal go ahead to tokenize US Treasuries and all of the blockchain options out there, and they chose to do so on the Canton network.
Yeah, I mean, I've been in Bitcoin since '09, and it was fun to be a degen for a while. I don't take anything away from anybody, but as we've become a much more legitimate industry, it's worth trillions of dollars. The degens have become the institutions, and their needs have gone up with it. And there are a number of firms that have matured along the way with the ecosystem that grows. It doesn't mean that we're escaping out into a whole new ecosystem of participants. It means that we get to apply the skills that we've honed over the past 10, 15 years into a bigger ecosystem. There's someone very close to our company that likes to call crypto Little League. Maybe that doesn't resonate here in France, but it's the league of baseball right before you get to the major leagues, and it's the same sport. It matters. It has the same rules, but no one's making a multi-billion-dollar paycheck in Little League. And there's the opportunity for everybody here is to graduate up into the big leagues, step in, and really evolve and change the way that finance works for everybody.
Alrighty, everybody, what is going on? Welcome back to another detailed CYPRX research video breakdown. In today's video, we're going to be diving into the Canton network and the individual builders of the Canton network, a digital asset. So this video is going to be very, very lengthy. I'm going to chuck it up into maybe 2 to 3 parts. We're going to be going over regulatory clarity, regulations, the Canton Foundation, who's in the Canton Foundation, some of the most recent announcements over the past, I'm just going to go back maybe 1 to 2 months. I won't go back any farther than that. All the recent developments that have taken place on Canton, showing you guys how over the past consecutive couple of months, I've switched a lot of my focus into diversifying into assets that nobody really talks about, nobody really knows about. Especially the bullish moon boys on YouTube. It'd be one and the same if Ripple had all these announcements or if XRP had all these announcements. The bullish moon boys would be eating this news up. And so it's just crazy how nobody's talking about the Canton network. Even some of the biggest influencers in the game, which I shared with you guys in the Discord the other day, don't even know about Canton network. And we're seeing massive price appreciation so far across the, I mean, not, I wouldn't say massive, but definitely some very significant price appreciation across the board since we started mentioning Canton in this group. They're partnered also with other organizations and companies that have caught our radar and our attention, which we'll also go over in today's video breakdown. So this one is going to be one to just buckle up your seatbelts for. If you're not bullish on Canton already, then put your bullish hats on because you're probably going to be after today's video breakdown. Remember that none of this is financial advice. As always, assess your own personal risk properly and just go out there and do your own personal research after this call, even though this is going to cover a lot of research in detail. At the end of this, I will also tell you guys where I'm going to be buying my Canton, where I'm going to be storing my Canton, and some other places that you can buy and store your Canton as well, just so that way nobody's confused. Alrighty. So that gentleman there was the co-founder of the Canton network. And he was specifically just saying how, the digital asset ecosystem is stepping into the big leagues, and Canton fits that role 110%. After today's video breakdown, that is going to be undeniable proof. Now, here in this private CYPRX community, on December 18th, I shared a note saying to you on X and in the private CYPRX Discord, do not sleep on Canton network. Since that specific day, prices up roughly around 51%, while much of the altcoin market has continued to struggle. Now, that call out was not luck, and it was not a guarantee either. The call came from a process, not prediction. Inside our CYPRX Discord, we spend a lot of time teaching you all how to read the market structure properly. In this case, a delta held pattern, this is very important, a delta held pattern stood out to me on the Canton network. One of the behaviors that we train our members to recognize so that they can make informed, risk-aware decisions and diversify with intention instead of emotion. That's really the bigger point here. Consistent growth in investing doesn't come from chasing narratives or hoping for higher prices. It comes from education, repetition, and learning how institutions actually deploy liquidity. As we head into 2026, that's the edge that we're going to focus on, continuing to give people the tools to see the market more clearly, not just react to it. Also, this post isn't a claim that the bottom is in. This is very important because we could still see some trials and tribulations and headwinds in the future. So I attached the updated delta zones that our software highlights so that you guys can see where institutional liquidity is currently resting. Use this information wisely. All right. And so you guys can see some of these zones, right? Some levels, key areas of interest to pay attention to. We just recently broke above the dark pool at 10, 10 cents, give or take almost about 11 cents, and have since recently retraced slightly back down into almost the 9 cent zone. But I'm definitely paying very close attention to these lower level dark pools if we start to see a risk off sentiment continue to materialize in the future. Nonetheless, here's that screenshot where you can see I was seeing the delta held pattern, the break of market structure, the two and the pullback, and then the three for the entry when the retest happened on the EMAs, where I mentioned to you guys not to sleep on Canton. But we have been talking about Canton all the way back at the beginning of December, particularly on the 4th and the 5th, when Canton was at its most recent local bottom at roughly around 6 to 7 cents, right? And we had been talking about that in our private community. But the reason why I brought this up, talking about the dark pools to start this off, is because the co-founder that you just listened to, talking about Canton stepping into the big leagues. Well, here he is in a podcast from just 1 month ago. This only has 237 views, and he particularly mentions the terminology dark pools here and how Canton is the only blockchain network right now that has the capabilities to provide institutions with the privacy that they need to fully come on chain at scale. So take a second here and just listen to what he says.
Stuff like that, right? So what would be that mental model about Canton for someone who's a DeFi powered user?
Yeah, I mean, it really comes down to privacy. And when I think about how dangerous it can be to know everyone's position in these perp dexes, to me, that's the obvious thing to do on Canton instead, is manage your inventory and your collateral and your risk on Canton. So if you think of like the evolution of dexes as being AMMs in the ETH ecosystem, CLOBs in the Solana ecosystem, for us, I believe that our next iteration will be dark pools. Dark pools will really be the way to think about on-chain DeFi. And there's some cool stuff coming online soon for that.
What's the defensibility or what's the moat in the institutional DeFi or institutional blockchain space, if I would say so?
The moat. Yeah, I think the moat is really different at different stages. So right now, we really are the only ecosystem that can support privacy at scale in a compliant manner. Again, not the use cases of like Zcash or Starknet, but really institutional sort of privacy. So if that is important to you because you're trying to move stablecoins at scale, you're trying to do capital markets at scale, you're trying to do, anything at a scale that would be above and beyond, the low single digit billions that you find in a really big retail audience, then I think Canton is really a no-brainer. But
So I'll pause it right there. He's talking about institutional privacy at scale. If you're looking to operate with the single digit or higher billions of dollars, Canton Network is an ideal, blockchain for you to utilize. It'd be a no-brainer. And I just like how he mentioned that they have some things coming online in regards to dark pools, right? So I feel like in the coming months and years ahead, the retail is going to finally catch on to what we've been offering in the private CYPRX community for going on almost 4 years now, that dark pools and paying attention to institutional data is the key to success in these markets and that it is possible in order to do so. But I just liked how the vocabulary that he utilized here aligns with things that we've been giving you guys access to for years now, right? Which just goes to show how ahead of the curve we are. Now, because he mentioned that they're the only blockchain that fits the regulatory compliance requirements for institutional privacy. That leads me over here to Yuval. He is the co-founder of Digital Asset as well. And just listen here to what he says. This is a November 26, 2025, the Thai conference that took place. This only has 35 views as well. And he kind of just reiterates what Canton is doing, what their goal is to bring on-chain finance onto Canton Network in a privacy setting. So just take a second here and just listen.
Assets in Web 2 style, and then they just mint IOU tokens, meaning you have some kind of a claim on chain against some broker dealer, which is usually in the BVIs. Not really something that institutions would participate at scale in. And therefore, what we're trying to do is we're trying to actually get the books and records to be natively on chain. So when you're holding a token, you're holding legal tender. You're actually holding the asset. And we believe that only this way we're going to get the institutional flow to come into, into participating on chain. So that transaction was together with DTCC, and Mike can talk more about DTCC, but for those that don't know DTCC, it's the largest CSD in the world, manages, I think, about $80 trillion worth of assets, and pretty much every major financial institution has an account there. And what we wanted to show is that you could actually hold not tokenized treasuries, but actual treasuries at the DTCC, just holding them on chain. So we're not actually changing the way that the market is managed, we're just making it more efficient. And the example that you mentioned, it's a lot of TradFi, but also crypto-native organizations like Virtue and Cumberland, which are both. And now for the first time, they can actually go into the after hours long treasuries. They don't give up the yield by holding stable coins. And any given point in time, they can actually just convert their US treasuries into stable coins if there's activity in crypto. But you don't need to require a lot of imagination to think that, well, if it works for crypto, it also works for traditional markets. And for me, as Josh said, it is the only opening shot for a lot of very exciting things to come. So maybe I'll let Mike continue that.
Right. So just kind of like a brief intro into what Canton is attempting to do, and who he's sitting next to is a key representative from the DTCC. I don't remember what role specifically this gentleman, Michael Winnicky, plays from the DTCC, but I do know that it is a high-end role, and he's sitting next to him on stage. I'll play another video clip here in just a second from this gentleman where he goes on to talk about how they are interested in investing into what Canton has to offer. And then you're going to see the new net announcement that just took place from the DTCC and Canton here in just 1 second. So they told everybody this on stage days before the announcement, which I just find funny because, again, this is 35 freaking views. But now let's get into the wits of Canton Network and the compliance features and the team behind Canton Network and whatnot. Just, again, scratching the surface a little bit. So coming over to the Canton Network LinkedIn profile here, it says... Canton Network is a public network designed for institutional finance, but it works just like the internet. Applications set their own permissions, some fully open, others tightly private. It's the same model your bank uses online, public rails with controlled access. Validator participation is open with sponsorship. Anyone can request a node and join consensus for the transactions they're part of, while governance remains fully transparent through the Canton Foundation. Now, I wanted to know more on how long Canton has been around, specifically Digital Asset, the group that built the Canton Network, and they've been around for freaking a very long time, like literally since the beginning, the early days, 2009, 2012 timeframe, and I did not know that. Their roots go very deep. So here you can see this is directly from the Canton Foundation, and it actually was only posted about a week ago, and it says, over 10 years in the making, how Canton Network redefined blockchain for regulated finance. So how is this organization, right, been in the game for 10 years? Obviously, of course, they just launched the token on Canton Network as of recent. That was in the last month or two. Nonetheless, it's still, nobody knows about this. Nobody. It's crazy. Canton Network was born from a simple but powerful insight. Privacy must be built into the protocol. Instead of hiding data behind layers, Canton architecturally segregates it, giving institutions programmable privacy to define exactly who sees what for each transaction. So this is their journey starting in 2009, 2017, Bitcoin, Ethereum, and DOM, buy digital asset. We'll get into that in just a second. Lay the groundwork. So DOM, or DOML, however you say that, was built by Digital Asset. We'll get into that. Goes all the way back from 2019 to 2007, so the early days. 2017 to 2019, DOML deployments expose limits of public blockchains. 2021, Canton Network development begins. So that's when the Canton Network started to come online. May 2023, launch of 30 founding institutions, including Goldman Sachs and Euroclear. So there were 30 founding institutions that, helped develop all of this. 2024, 2025 foundation launches. So that was obviously, of course, the last year to most recent times. Broadridge joining $5.9 trillion in monthly volume revenue. This is extremely important because of something that Yuval is going to say to you guys on stage here in just a second, confirming that there's already over trillions of dollars flowing through Canton Network right now. And you're going to hear Yuval say here in a second that institutions are going to start publicly announcing that they're using Canton Network more and more as time progresses. And right now there's over 580 plus validators. Why Canton exists? Founded to fix what public chains couldn't, which is privacy, auditability, and legal finality. Its architecture enforces data minimization and confidentiality, meeting regulatory needs while preserving composability. By extending DOML into privacy-first networks of interoperable domains, Canton delivers atomic, compliant settlement for the world's most advanced financial institutions. Now, coming over here, this is the founding members, some of them that launched the Canton Foundation. You can see here the foundation group includes Seven Ridge, Bitwave, Broadridge, Calastone, Cumberland, all these large financial institutions, Digital Asset, Equilend, Euroclear, Global Blockchain Business Council. Global Blockchain Business Council, mind you, I'm pretty sure like Ripple, Hedera, Stellar, like all these people are part of the Solana, like all part of the Global Blockchain Business Council, the GBBC, Intellect, Kaleido, Lend, LC Ventures, Obsidian Systems, SBI, right? Moody's Corporation, which is a huge rating agency, TradeWeb. All right. So those are just some of the founding members that exist on the Canton Foundation. We'll get a little bit more in detail into that. But back to this terminology here, because this kind of, I was like, what is this? Right. I was like, what is this DOML? Because I've heard about Bitcoin and Ethereum before, and we know that that came around in 2009 to 2017 type time frame, early days. But it says here that DOML, hopefully I'm pronouncing that correctly, by Digital Asset laid the foundational groundwork for the digital asset ecosystem. So I was like, I need to get onto that. What is that? So this is a full fundamental breakdown from Figment that was released in 2025. Mind you, Figment, again, if you guys don't know who Figment is, go check them out. Very large institutional participation in regards to Figment, but Figment plus Canton here, okay? And they put out this huge piece. I don't want to read the entire thing. I'll briefly touch on the intro. It talks about what is Canton, but more importantly, it talks about this DOML, okay, which is Canton's programming language. All right. So check this out. Regulated financial institutions are increasingly interested in the benefits of using internet native financial rails. Mind you, again, I just want to show you guys dates to show you all this info is relatively updated. This is from this year, 2025, right here. Regulated financial institutions are increasingly interested in the benefits of using internet native rails. However, for many institutional use cases, public blockchains fall short of providing the full scope of functionality needed to augment or replace legacy financial backends. Privacy with auditability, the ability to establish controls around who can transact with whom, KYC and AML checks, this is important, keep this in mind as we progress, and more are all needed to facilitate many types of workflows that major financial institutions handle today. Despite all their unique benefits, existing public blockchains do not, I repeat, existing public blockchains do not typically support these features. And remember, you just had both co-founders of the Canton Network say that Canton Network is designed specifically to solve this problem. Canton, a new layer 1 blockchain ecosystem developed by Digital Asset, aims to provide the solution to this problem. In doing so, it enables the largest financial institutions in the world to move on-chain without disrupting their workflows. Canton is still relatively a new network, but is rapidly gaining traction with financial institutions around the world in use cases including, but not limited to, derivatives trading, treasury tokenization, natural gas trading. So it talks about what is Canton, but more importantly, like I said, what is this programming language? At the core of Canton's network is DOML, or Digital Asset Modeling Language, an open source smart contract language purpose-built for institutional finance. Unlike most general-purpose smart contract languages, DOML is optimized for regulated entities, allowing developers to codify financial agreements and business logic in a way that mirrors real-world legal contracts to streamline trading activities, Collateral management, this is very important. I'm going to highlight this in purple. Okay, we're going to come back to this. You're going to notice this word twice, and it's going to play a key role considering that they just partnered with the DTCC in something that Dan Donnie said is the most important freaking use case in all of traditional finance, which is collateral management. Okay, and regulatory reporting. DOML enforces explicit rule-based access control at the language level, which means that contracts specify exactly which parties can view or modify data. This ensures that sensitive details remain visible only to stakeholders, even in multiple-step workflows involving numerous organizations. Sub-transaction privacy guarantees ensure that participants see only their portion of a transaction, supporting strict regulatory requirements such as GDPR and HIPAA. It also offers atomic composability, which ensures that multi-step transactions either succeed entirely or revert, eliminating risks associated with partial transaction execution. Damn, you got to nerd out with me, guys, to read this stuff, right? While these atomic settlement guarantees are native to single sync domains, a concept which will be covered in more depth shortly, the Canton network enables these guarantees to be extended across multiple domains. DOML applications can thus orchestrate workflows that span private institutional ledgers and public domains, setting transactions and involving tokenized assets, cash, and data across jurisdictions, all while retaining privacy and compliance functionality. That is huge. So unlike most public blockchains, to finish this up, Canton is not a single monolithic network where all participants have connectivity and visibility into all network state and activity. Instead, Canton is structured more like the Swiss governance system, for which it is named. It is a collection of DOML applications running on Canton ledgers, each of which can choose to connect with other applications or remain separate. In this network of networks, there is no global ledger replicated across all parties. Instead, each user maintains a ledger containing only the data they are permissioned to see by the DOML application. Connections and data sharing occur solely at the discretion of application operators. As a result, application operators and users have complete control over which parties they transact with, enabling robust adherence to KYC and AML. There's that reference again, keep in mind, a data security requirement. By allowing participants to replicate existing institutional workflows and modernize financial rails, Canton delivers blockchain benefits for institutions while preserving the key features required for compliant enterprise use. So I needed to find out what that DOML meant, and it's obvious, of course, huge, considering, again, that this is the Canton programming language, and it has been around since the early days of Bitcoin and Ethereum, okay? And again, when have you heard about this? I haven't, and I've been in crypto since 2016. What? So I'm like, yeah, this is some big stuff here. Now, because it continues to talk about KYC, AML, and how Canton is so compliant, well, real fast, take a second and just listen to this. This is the co-founder, Yuval here. This is from just a month ago. Look at the views, 116 views. Again, shout out to the researchers for all of this information. All this research can be found inside the private CYPRX Discord. Listen to what he says here. He specifically says the co-founder of Canton was one of the co-creators of KYC AML, or zero knowledge proof, back in the early days of blockchain. Take a second here and listen to this.
They need to be able to make sure that said stablecoin issuer have complied with all KYC AML rules. A lot of times what you will see, because most layer ones did not solve for privacy to begin with, they're hoping now that zero knowledge proof will be a patch that you can, slap on a layer one and voila, you have privacy. But the reality is zero knowledge proof is not compliant. It's a black box that doesn't allow the issuer or the regulator to actually see what is happening inside. And although it's a very exciting technology, my co-founder actually is one of the creators of zero knowledge proof. It's not compliant with regulations. And therefore, I think that that's an extremely important thing to understand the difference if you are a regulated financial institution. And as a result of that, as you can see, these type of regulated institution trusted Canton, we have over $6 trillion of assets already on chain. You will see more and more. A lot of people ask me, why don't you see this on rwa.xyz? What we're doing is we're asking some of our clients to actually start exposing the numbers. But again, That's one of the challenges with privacy. You can't just see everything that is happening on chain.
Y'all, please tell me you all just heard him say that there's over $6 trillion right now on fucking Canton Network. What? And he said that one of the co-creators of Canton Network was also one of the founders of Zero Knowledge Proof. Now, I looked this up. The dude's name is Shaul Kafar. Hopefully, I'm pronouncing it correctly. And it does say that back in 2013 to 2017 timeframe, this gentleman that he's talking about, one of the co-creators of Canton, was one of the gentlemen who contributed to bringing zero knowledge proof into blockchain systems that occurred back in like the early 2000, like I mentioned, 12 to 2013, 2017 type time frame. All right. That is crazy. So, you know, this, I don't know what this means, but this just goes to show that there's like some type of freaking crypto ecosystem out there that exists that the retail we can't even see, right? Because he said, well, why can't you see this on, you know, rwa.xyz.com or whatever the heck, you know? And he just said they're going to start asking institutions that they're partnered with to start releasing this information. What is going to happen to the price of Canton when everybody starts to realize like trillions of dollars are already flowing through the network, right? I'm trying to be in my positions during this whatever cycle we're in, this pullback, while prices are discounted, or even if we go lower, before the masses catch on to what this dude just said, right? And again, this is from freaking 1 month ago. 116 people, guys and gals, have seen this dude say that outside of who was actually at this conference. Okay. Super early. Now back to the compliance features, if that didn't blow your mind. Okay, so in this community, we've obviously, of course, stressed the importance of blockchains, particularly in the likes of like Metallicus, Metal, XPR, and the whole SOC, BSA compliance features that they hone, right? And how they have been, at least to our attention, brought up by Mr. Aquaman, the only blockchains that hold both BSA and SOC compliance features. Well, Canton, believe it or not, has both, right? So that blew my mind. Now, check this out. I made sure to double check this with 2 AIs and find the documents for you guys to prove this. So here you can see my whole entire conversation with this is Perplexity. And here it goes on to talk about, I just asked it, you know, is Canton Network SOC compliant? And it says here, digital asset has successfully completed the SOC2 type compliant independent audit on its products and services since 2019. So it's been SOC compliant for years. ChatGPT said the same exact thing. Yes, this document, which I'm going to pull up for you guys here in a second, clearly states that Digital Asset, the creator of Canton Network, is SOC2 type compliant. On page 6, under digital asset security, attestations, and certifications, the document explicitly says since 2019, Digital Asset has successfully completed SOC2 type independent audits with unified opinions, right? So here, we just come over to the document. I'll just show you guys right here. Scroll up here. Here's the document that came out July 2023. Digital Asset, that's the organization that built the Canton Network. If we come right down here to page 6, it specifically says, since 2019, Digital Asset has successfully completed the SOC2 type independent audit, right? Huge. Now, BSA compliance. This is where it gets a little bit tricky because the Canton Network itself, okay, supports BSA compliance, but does not have to be BSA compliant because of, let me just read this. So asking, is Digital Asset or Canton Network BSA compliant? Digital Asset and the Canton Network are designed to support BSA AML compliance, but neither is BSA compliant in the sense of being itself a regulated financial institution subject to the Bank Secrecy Act. So because Canton Network is not a regulated financial institution subject to the Bank Secrecy Act, the actual BSA obligations sit with the banks and broker-dealers, the MSBs, and other regulated entities building and operating on Canton Network are using digital asset software. So how BSA compliance applies here. The Bank Secrecy Act allows treasuries, FinCENs to impose reporting, recording, or record-keeping KYC and suspicious activity reporting requirements on financial institutions and other covered businesses, not on general-purpose software or open protocols. Recent legislative and policy proposals aim to extend BSA responsibilities explicitly to digital asset wallet providers, miners, validators, and network participants, again, focusing on regulated businesses and roles, not the code base itself. Canton is marked as a privacy-enabled institution-focused network where each participant controls whom they transact with and where data resides, so that existing KYC and AML and other regulatory regimes can be applied on the same activity, same regulation basis. Canton has integrated risk and AML tooling. For example, TRM Labs, which is a node provider and partner of Canton, acts as a supporting validator connecting to the global synchronizer and provides on-chain AML monitoring for Canton, Coin, and USDC, giving institutions infrastructure to enforce AML CFT controls that align with BSA expectations. So, in a nutshell, the banks pretty much that use Canton Network are the ones that have to be BSA compliant, not Canton Network itself. So it says here the network technology alone is inherently not BSA compliant. Compliance with BSA and AML laws depend on who is using the network and how they implement compliance controls. So what I did says here Canton does provide the technical building blocks that can support regulated activity, but BSA compliance must be implemented by the financial institutions and service providers or DApp using the network. So what I did is I went over to Canton Foundation and I went and I looked at who's using and who's partnering with the Canton Network. Here's all their members, right? You can go and you can look at all of their, co-founders, their CEOs, their team members all here, large organizations, right? The likes of freaking TradeWeb, you got Broadridge, you got Liberty City Ventures, all these organizations here, and all of these organizations are BSA compliant, right? So I just typed in a couple, right? Broadridge, BSA compliant. Euroclear, BSA compliant. DTCC, BSA compliant, right? So Canton Network supports BSA compliance, which allows these BSA compliant financial institutions to operate effectively and efficiently on their network, all right? So that was just, again, a solidification for me that Canton Network has been pretty much at the foundational level since the early days of blockchain, building out this infrastructure for compliance, privacy, financial institutions coming in at scale on chain, right? So that was interesting. Moving on to some of the recent announcements, okay? This is posted just from a day ago from James Lang over on LinkedIn. And it says, this is an important milestone in the transformation of financial markets infrastructure. The Canton Network is purpose-built for financial institutions. Then he reposted the Canton Foundation from one day ago. We are pleased to announce the Depository Trust and Clearing Corporation, or DTCC, is now a super validator on Canton Network through our recent CIP 0083 approved by the vote of the super validator node operators. As a super validator, governance, co-chair, and a core partner in bringing U.S. capital markets on chain, they will enable a subset of DTC custodied U.S. Treasury securities to be minted on the Canton Network in a controlled production MVP environment. Let the DCC participants convert select supported assets between traditional book entry and tokenized forms with the same CUS IP investor protections and ownership rights, and help build a secure, transparent, interoperable digital asset ecosystem that bridges TradFi and DeFi. This is important. That helps bridge TradFi and DeFi with embedded compliance and multi-blockchain connectivity at global scale. We are proud to work alongside the DTCC and digital asset as they connect institutional liquidity to the Canton Network. Then we come over here, Jonathan I on LinkedIn. Let me give him a follow. If blockchain makes you think meme coins and rocket emojis, here's the plot twist. U.S. Treasuries. I never imagined I'd be writing about tokenized U.S. Treasuries from a Wall Street office. And for my marketing and creative friends still following me here, let me lay it out for you. U.S. Treasuries are the U.S. government's IOUs. In capital markets, they are the gold standard of collateral. When markets need trust and liquidity, this is what they reach for. Now, the headline. DTCC, the legal go-ahead to tokenize U.S. Treasuries and all of the blockchain options out there, and they chose to do so on the Canton Network. This is a signal and not a subtle one. Picture a 1,000,000-watt bat signal, but it's a giant Canton logo lighting up Wall Street skies. What? Okay. Canton Network is leading the way. The scale is staggering. The DTCC safeguards $100 trillion in assets, and the Depository Trust and Clearing Corporation runs close to 4 quadrillion in annual transactions and value. When infrastructure at that level chooses a network, it changes the conversation, right? This is what Digital Asset and the team has been building toward for 10 years. Mind you, again, I just showed you guys in detail, going all the way back, how they've been doing this, right? For over 10 years. 10 years in the making. Starting all the way back from the early days. Bitcoin, Ethereum, and blank, things that people have not heard about. DAML, built by Digital Asset, which is the core programming system of the Canton network, has been around since the early days, helping build out this infrastructure. Okay. And now it's finally starting to surface. Finally starting to surface. So as we continue, here is the gentleman from the DTCC. Listen to him sitting next to Yuval specifically mention, we are interested in utilizing and integrating this technology.
But we are very interested in the opportunities to invest in this market structure change, and we certainly have discussed publicly our ambitions to be able to make of change, and we certainly have interested in the opportunity would involve a lot of engagement with our regulators, et cetera. But we are very interested in the opportunities to invest in this market structure change, and we certainly have discussed publicly our ambitions to be able to make available to the market the assets, the 100 trillion or so in assets that are held at our depository, on chain for use cases like the one that we saw. Now, in terms of I guess our thinking beyond just the P&L kind of benefits, I think there is the question of, well, what is the foundation, right, that can enable 24/7 finance? What are the preconditions for that? And when we think about that, yes, it's exactly what you've all mentioned, right? You need the legal certainty that the asset that's represented on chain is the exact same asset that you could have in traditional book entry form. But it goes beyond that, right? If you're in a financing trade, what do you need to know, right? You need to know that the asset that you're holding is one that in the sad case where your counterparty is insolvent, and these things tend to be highly correlated. So maybe not just your counterparty, but a broker that might be intermediating in some capacity is insolvent, or an issuer. There's other insolvencies in the ecosystem. Do you have the right UCC treatment, right? That that you not only are holding the real asset, but that it will be your asset, right, in the event of insolvencies. And when we look at other tokenization models out there, there's really questions around, are you taking new creditor risk? Is this more of an IOU rather than your asset? So I think that's one foundational aspect for traditional finance, but also for moving assets on chain that has to be delivered. So there's the legal certainty aspect there. Then you have to be able to sell the asset. So the method of this asset that you're holding, being reflected on potentially, a ledger like Canton, do you have access to pools of liquidity, right? And is there interoperability? So when we think about that, that means not only being able to represent assets on chain, but the high fidelity back to the deepest pools of liquidity. So maybe that means you can liquidate on chain if there's trading applications stood up in liquidity, but you can also rapidly move that asset back to traditional form if you want to take advantage of liquidity in the traditional markets. So, having collateral is only good as your ability to liquidate, right?
So at the beginning of his little speech there, he specifically said, we are interested in utilizing this technology to bring our $100 trillion of assets on chain. And then he just mentioned the example in collaboration with Canton Network. Mind you, this video was from 3 weeks ago, has 37 views. Days later, what was announced? Look at this. This is just from the other day. So today is December 21st. This is from December 17th. This video where he says that they're going to be, interested in doing this, and specifically just mentioned Canton in the example. Then days later, the DTCC announces this. DTCC and Digital Asset partner to tokenize DTC custody U.S. Treasury securities on the Canton network. Come on now, y'all. You can't make this shit up. New York, London, Hong Kong, Singapore. The Depository Trust and Clearing Corporation, the premier post-trade market infrastructure for the global financial services industry alongside Digital Asset Holdings, and the Canton Network today announced a partnership to enable the tokenization of the Depository Trust Company, or DTC, custodied assets on the Canton Network. The partnership reflects Digital Assets and DTCC's mutual commitment to pioneering digital transformation across capital markets. Today's partnership announcement follows the DTCC's recent receipt of a non-action letter from the SEC to implement and operate a new service to tokenize real-world DTC custody assets. With this partnership, DTCC plans for the first time, I repeat, for the first time. So think about all the people, all the freaking content that were like, oh, DTCC is going to use XRP, DTCC is going to use XDC, DTCC is going to use this blockchain, this blockchain. No, it's saying for the first time to enable a subset of U.S. Treasury securities custodied at the DTCC to be minted on what network? The Canton network for the first time. So scratch what everybody else was saying about DTCC using whatever networks before this announcement because they're choosing the Canton network. The organizations are working towards an MVP in a controlled production environment during the first half of 2026, with plans to increase the size and scope of the project in months that follow, based upon client interest. To begin, DTCC will leverage its Composer X suite of platforms to enable the tokenization of U.S. Treasury securities custodied at the DTCC. The DTCC's partnership with the Digital Asset and Canton Network is a strategic step forward as we collaborate across the industry to build a digital asset infrastructure that seamlessly bridges TradFi and digital financial ecosystems and provides unmatched scalability and safety, said Frank LaSala, CEO, the freaking CEO of the DTCC. This collaboration creates a roadmap to bring real-world high-value tokenization use cases to market, starting with the U.S. Treasury securities and eventually expanding to a broad spectrum of DTC-eligible assets across the network providers. The partnership reflects a collective ambition of leading market participants to create future-proof, interoperable financial systems, said Yuval Ruz, co-founder of CEO and Digital Asset. DTCC's leadership in the space not only accelerates industry adoption, but establishes a foundation for meaningful innovation, unlocking new liquidity opportunities, products, and operational improvements. While the full DTCC Digital Asset and Canton Network partnership roadmap is anticipated to unfold over multiple years, so this just gives us an insight into having a long-term zoomed out perspective. The first phase, so this is only the first phase, aims to deliver tangible benefits to market participants by providing access to digitized financial instruments in secure, regulated environment. This phased approach helps ensure flexibility and adaptability, allowing participants to adopt decentralized technologies while meeting regulatory requirements. So I'm not going to sit here and be like, oh, Canton to the fucking moon, Canton to $100. But in this phased out process over the next 5 to 10 years, I'm sitting here with a firm belief that Canton is going to be a leading industry participant, probably in the top 10, if you ask me, or top 20 at least at a minimum in the future, right? Now, coming over here, aside from that major announcement and all the things that I've shown you guys so far, Canton Network has been freaking cooking, absolutely cooking. So let's just look at some of the recent announcements over the past 2 months. December 16th, 2025. I'm just going to briefly read 2 highlights of each of these announcements. EDX Markets, a leading digital asset technology firm that combines an institutional-only trading venue with the central clearinghouse, today announced a strategic partnership with Canton Network. Partnering with Canton Network is a natural extension of our commitment to deliver high-performance, institutional-ready infrastructure to the digital asset marketplace, said David Olson, Chief Commercial Officer at EDX Markets. By supporting stablecoin settlement on Canton and participating directly in network validation, we are advancing our mission to provide secure, compliant, efficient solutions that meet the needs of institutional investors. That was one. Here's another one. November 12th, 2025. Franklin Templeton taps Canton Network to supercharge institutional tokenization, signaling a new era for TradFi and DeFi. So this is just from less than 2 months ago. In a landmark announcement set to reshape the landscape of institutional finance, Franklin Templeton today revealed a strategic collaboration with Canton Network. This partnership will see Franklin Templeton's proprietary Benji technology platform integrated with Canton, a blockchain purpose-built for institutional use, aiming to significantly boost the adoption of tokenized money market funds. This move underscores a pivotal move in the convergence of TradFi and DeFi. By leveraging bank-backed blockchain networks like Canton, Franklin Templeton is not expanding access to regulated digital asset products, but also establishing a new paradigm for liquidity in collateral and digital markets. This is important. There's that mention of collateral again. Okay. Remember, I told you guys pay close attention to that word as we round up the remaining portions of this call. This is directly from the head of digital assets at Franklin Templeton, where he said, our bottom line is to meet institutions where they are, and just as importantly, where they are headed. Integrating our Benji technology platform with the Canton Network allows us to deliver a private blockchain option alongside the interoperability clients expect, without compromising on the transparency and security that define our approach. Together with a team that deeply understands the institutional market structure and its quirks, we are building a foundation that can unite TradFi markets with rigor, innovation of tokenized markets. RChex, 2 weeks ago, announced that they are now live on digital asset Canton Network. Building and growing institutional client demand, Archax is bringing its regulated digital asset exchange, broker, and custodian infrastructure to Canton's institutional first interoperable network. Equilend 2 weeks ago. Equilend's OneSource is quietly transforming securities lending on Canton. So again, you have lending, right? Lending, borrowing, collateral management. Again, very important to pay attention to. Member banks today run post-trade processes on-chain via OneSource, showing what happens when regulated financial institutions can rely on a shared but private, preserving single source of truth. For U.S. equities and cash collateral loans, for example, users now benefit from 100% of trades processed with zero post-trade comparisons, zero reconciliation accepts, thanks to unified smart contract records, and no reliance on traditional contract comparison workflows. Another example of Canton's harmonizing books and records across capital markets, making finance flow the way that it should. So here is the official announcement from December 2025 from Equilend. Just so you guys can see that this is all as of recent. Another announcement that took place just 2 weeks ago. Morgan Stanley, freaking literally all the largest names in the game are choosing Canton, y'all. This is crazy. Morgan Stanley Wealth Management has adopted iCapital. iCapital is a Canton-based DLT solution to modernize its alternative business, automating subscription document processing, improving data quality, and reducing manual reconciliation across the entire investment lifecycle. When global leaders upgrade their systems, they are choosing Canton-powered rails. Here's the official announcement from iCapital, and if you come over here, directly on the Canton website, iCapital DLT is a distributed ledger platform built on the Canton network that standardizes and automates alternative investment and workflows for secure real-time lifecycle management. Now, if we go over to the iCapital website, what just recently happened, they serve over 3,000 wealth management firms and 118,000 active financial professionals, okay? And just recently, iCapital was recognized for its innovation and leadership with accolades from Euromoney, the world's best technology provider for wealth management, CNBC, the world top fintech companies, and the wealthiest alts investment platforms of the year in the Forbes FinTech 50. And they chose, right, Canton. Sorry, excuse me, Morgan Stanley chose iCapital, which is again a Canton-based DLT. As we continue, the Alfie future starts. So Digital Asset, the creator of Canton Network, have added a new strategic investment from BNY, iCapital, NASDAQ, and the S&P Global, which are all, S&P Global, mind you, is a ratings agency. This is important. Reinforcing the growing institutional alignment behind Canton. This is just from 2 weeks ago. So reading through this announcement, it says December 4th, 2025, Digital Asset raises fresh funding to scale Canton Network adoption. Institutional blockchain infrastructure provider Digital Asset, the creator of Canton Network, raised about $50 million in a strategic investment from BNY, iCapital, NASDAQ, and S&P Global, according to a person familiar with the deal. According to the announcement on Thursday, the strategic funding will build on Digital Asset's strong momentum to scale the Canton Network following a recent funding milestone that raised $135 million. The participation of these four big names highlights the range of institutions supporting the Canton Network as big banks, exchange data, and wealth infrastructure all lend their weight to the same underlying blockchain stack. Institutions across the financial ecosystem recognize the necessity of blockchain infrastructure purpose-built for regulated markets, said Yuval Ruz, the CEO of Digital Asset. The addition of BNY, iCapital, S&P Global, and the NASDAQ marks another milestone in the evolution of both Digital Asset and Canton. Now, coming over here, you guys remember how I talked about Collateral, right? And the DTCC and how they chose Canton Network for this use case. Well, if we go back to a video breakdown from 7 months ago, where Dan Donnie from the DTCC specifically said that the biggest use case in all of TradFi is collateral management. Take a second here and listen to what Dan Donnie says.
Assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else, we can actually make it possible to tokenize $100 trillion worth of value. No one else can do that efficiently. So we have both a right and a responsibility to do that effectively for the financial markets because it unlocks so much among those things that it unlocks. So we're building out those rails to do that, to make it so that parties can, within seconds, convert any traditional holding into token form to conduct transactions. But tokens themselves really aren't game changers. They're just another database, a database with benefits to be sure, but just another database in the end. It's actually what you can do with tokens that makes the big difference. And the foundational transaction in finance is collateral. So most people think liquidity really comes from trading activity, that, you know, that's what makes a difference, my ability to convert dollars to shares of Tesla. Yeah, that's important, but by far that's a drop in the bucket compared to transactions in liquidity that have to do with borrowing and lending. So there are transactions. Repurchase agreements are the way that banks get liquidity. So they take assets, high quality assets like treasuries, and when they need cash, they post them as collateral and borrow cash from one another in a model called repurchase agreements or repos. That transaction is the most dominant transaction of any globally on a daily basis. Over $20 trillion a day. I think it's even more than that. But anyway, roughly that amount is in that transaction. Well, it turns out blockchain is the perfect technology. Perfect. It's like tailor-made. It's the killer app for blockchain to do collateral management. Why? Because you can encode the locking rules into smart contracts. Now, if it were just that simple to make a smart contract that locks something up while another transaction takes place till it completes, then Aave and Compound and other DeFi lending, done. We're already there. Well, it's more than that. There are additional transactions that are required for how do I swap out my collateral, how do I properly price and haircut, and so on. So there's a lot more than just that.
Okay, so I wanted you guys to hear that directly from Dan Donnie, that collateral management is the foundation of traditional finance and one of the biggest use cases. And who did the DTCC just announce collaboration with in order to do this? Canton Network, right? So, huge news here, right? And again, people just are not paying attention. Now, what I like about what Dan Donnie just said is he mentioned Aave, he mentioned Compound. Well, recently in a post on X, which I failed to pull up here, but I noticed recently, and just looking at the total cryptocurrency market cap and coins in the top 100, okay, what just happened over the last 2 weeks? And it's just so, again, wild how nobody's paying attention to this. Over the last 2 weeks, Canton Network has flipped Aave, Crow or Crypto.com, Ton, Uniswap, and PayPal stablecoin in terms of market capitalization, just in the last 2 weeks alone. So just 2 weeks ago, Canton was sitting slightly below Aave at around a $2.5 billion market cap. Now Canton has flipped Aave with a $2 billion market cap, Ton, $3 billion, Crow, $3 billion, Uniswap, $3 billion, and PYUSD at $3 billion. Now Canton coming in at a $4 billion market cap, right? And again, nobody's paying attention to this stuff. So to finish this up, I'll go over one last partnership announcement because of another token that is on our radar as well. Again, not financial advice, but the Canton Network chose RedStone for their Oracle provider. And I don't think that this is by accident, considering that something you've all said on stage here. I'll play for you guys in just 1 second. But reading thoroughly through this, it says, from a week ago from Canton, applications for Canton's real-world asset ecosystem are now going to be powered by RedStone's real-time customizable data feeds. With Canton's configurable privacy and RedStone's gas-efficient Oracle architecture, institutions can now automate complex workflows for treasuries, private credit, syndicated loans, commodities, and more, all without sacrificing compliance or confidentiality. And here it goes on to say, this is from, again, just 11 days ago, Canton Network's masterstroke, how RedStone oracles unlock a $6 trillion real-world asset ecosystem. Again, what did Yuval say at the beginning of this call? That there's already $6 trillion flowing through Canton Network. And over the coming months ahead, institutions that are already flowing real-world assets through Canton Network are going to start to slowly come out of the woodwork. Why is the Canton Network and RedStone Oracle partnership a game changer? The core challenge in tokenizing real-world assets is trust. How can a smart contract on a blockchain reliably and know the price of commercial building or interest payments on a private bond? This is where oracles come in. They act as structured bridges, fetching verified data from traditional worlds and feeding it into blockchains. By selecting RedStone oracles, the Canton Network is choosing a provider known for its modular design, high-frequency data, updates, and robust security, essential ingredients for a multi-trillion-dollar market. I'm not going to give you guys any bullish Moonboy hope here, but just on your own time, just go and put in the coin perspective what would happen to Canton's price if this number was achieved. Okay, just go do that. Mind you, again, they partner with the DTCC that has quadrillions of dollars ready to come on chain. So when you think of that, these numbers aren't that unrealistic in the future. I'm not saying that that's going to happen overnight, but let's think 5-10 years from now, right? Plausible in my personal opinion. As we scroll down here, it says, how will RedStone oracles power the Canton Network's infrastructure? Think of Canton Network as a secure, interoperable blockchain designed for privacy and compliance tailored for financial institutions. For its applications to function, they need constant, reliable information. RedStone oracles will serve as the network's sensory system, delivering crucial data for various use cases. Now, if we come over here, what I find very interesting is Yuval here mentions the S&P and ratings systems and how important they are to traditional finance and how they're going to be important to DeFi in the future moving forward. Take a second here and just listen. This is going to go hand in hand with why I think they chose RedStone.
To help facilitate and scale.
Yeah, I think that all of the above. I think that one important thing that is going to be critical is that I think certain risks will decay over time, meaning new rails is the technology tested, and just over time you will see certain parameters of the risk framework just decay, been running for X years, it's sufficiently tested. I think that there are other risks that will just exist long term. For example, we talked about, and Mike brought up a good point about the liquidity over the weekend. I think that as we start thinking about pledging collateral on chain, you will really have to be educated. What are the risks related to this collateral? It's not just are you actually getting the actual asset, but for example, one of the risks of, we saw in the crypto event when you had auto deleveraging, and those things could happen over the weekend, and now suddenly you get unwinded from a leveraged position over the weekend, but there's no liquidity. You could create some pretty significant price shocks. And again, that's just the reality of 24/7, and it's something that needs to be taken into consideration. So I do want to give a shout out. Charles from S&P is here, is actually just really thinking about how do we educate the market about those risk frameworks. And I think that that's one exciting opportunity in terms of how we think about rating. Today, rating would be more kind of like counterparty risk, like how do I rate a bond or some kind of a credit risk. I think that one of the things that S&P, for example, is really thinking about, which is a great thing, is, well, how do we think about those risks with respect to tokenization, which is infra, cyber, liquidity across, and we're just going to see this new type of development going forward that would have to be associated with tokenization, just because we're seeing how many different options are coming to the market. And it's not important just for the investors that are participating, but it's also going to be important for a clearinghouse that wants to accept collateral to think about how much of this collateral I'm willing to accept as a result of all of these risk parameters.
So he's specifically talking about the importance of rating agencies, right? Well, do you guys not remember what took place via RedStone and who they acquired at the onset, pretty much their highlight of this year? So take a second. This is the RedStone co-founder, where he goes on to talk about their acquisition of Credora, a rating agency, and just how important it is.
Like a few, and usually they're done by large companies, like, for example, Stripe bought Privy or Stripe bought Bridge and so on. So a large company decides to enter like a new vertical, right?
Yes.
And RedStone acquired Credora Network, which is a DeFi rating agency. And RedStone is fairly large, but I wouldn't call it in comparison to Stripe. So it wasn't an easy decision for us also to take on, like a new business line in that sense.
Yeah.
Acquisition is a lot of legal, operational, engineering work to make sure you don't hiccup on it in a sense. But we decided to do so because of the three elements. The first one is ratings in TradFi is an enormous business. There is S&P, Moody's, and Fitch, which are the three biggest rating agencies. And in TradFi, majority of well-established products are rated, either because the clients require it, or sometimes even by law or internal policies of big funds, they cannot invest in products that are not rated. So I do believe this category will only grow in DeFi. Second reason is Credora had an engine, so a methodology to create a rating, but they did struggle, one, with distribution, which we have, and the second part is the data, which is the oil for the engine. And we have the data because we gather it anyway as an oracle. And the third reason was that ratings can be adjacent product to oracles. Why? Because we work with asset issuers anyway, such as tokenized funds. BlackRock Biddle is one of our clients, Apollo Acred, Hamilton Lane Scope, and all of them have those tokenized products. There's going to be hundreds of thousands of them, and for regular users to decide which one is better than the other, rating can be this very easy to grasp and understand metric that they can follow to take a decision on the allocation for their portfolios. So all of that makes.
So he's talking about how these institutions are going to need ratings in order to take into consideration allocations to their portfolio. I don't think it's a coincidence that Canton chose RedStone, and how both the CEO of Digital Asset, i.e. the builder of Canton Network, is talking about ratings on stage. The gentleman from RedStone talked about ratings, right? And if you guys remember what took place, 2025 September, RedStone acquires Credora, strategic expansion into risk ratings. RedStone has acquired Credora, the leading DeFi native ratings platform. This creates the first oracle that delivers real-time price and risk ratings, giving protocols and users the tools to build a safer, more transparent market, and a big step towards building a unified financial infrastructure. For most of its history, decentralized finance has lived apart from traditional finance. DeFi is open, fast, programmable, and experimental. TradFi is regulated, slow, opaque, and institutional, and risk-aware. Now those worlds are converging. With the acquisition of Credora, we are building the first oracle that unites price, risk ratings, and collateral intelligence under one roof. This is a major step towards creating a unified infrastructure that finance needs to scale. The key takeaways of this is that ratings give retail investors clarity on risk-adjusted returns and provide institutions with reliable frameworks for allocation. Data shows that rated vaults grow faster and attract more liquidity than unrated ones. And if you go back to the date that this was announced, September 4th, 2025, and you look at RedStone's freaking price on the date that this was announced, look at this, guys and gals. I'm telling you, this is not all accidental. This is what's coming. Look at the date, September 4th, 2025, and RedStone's price went from 39 cents all the way up to $1, which is a 156% surge in one freaking candlestick on this announcement. Okay? So I'm paying attention to projects like this, and after showing you guys what I showed in today's video breakdown, again, not financial advice, I think everybody should start to consider diversifying into projects that are building behind the scenes that nobody talks about. When was the last time you saw an influencer talk about RedStone or talk about Canton Network? At least to the scale and depth and breadth that I just did. Not pretty much one. Hardly any, if that, right? This will probably be the first publicly uploaded video on Canton Network going into detail on everything that I just showed you guys, right? So now the question on everybody's mind, if you don't have Canton already, and you're interested in getting it, again, not financial advice, the route that I took to get it was I purchased it on Kraken, okay? And I opened a wallet on Braun Wallet, which is a wallet that was created by the people that built Copper, right? If you guys don't know who Copper is an institutional custody provider of digital assets for institutional grade security, right? The same people that built the Braun Wallet. But you can also get Canton on Uphold. Now, the problem with getting Canton on Uphold is that you cannot send Canton or native Canton, i.e. through the Canton network, off of Uphold. So if you buy Canton on Uphold, you have to store it on Uphold. I personally don't trust Uphold, but nonetheless, it is still a route for you to get Canton if you do not have access to Kraken. You just cannot swap Canton off of Uphold using the Canton network. You have to store it on Uphold or swap it into another currency. And then that's how you can get your assets off of Uphold. But unfortunately, you cannot do it with the Canton network. So in a nutshell, Kraken, in my personal opinion, is the way to go. If you're looking at getting into digital asset Canton, not financial advice. I'm just showing you guys how I was able to purchase it through Kraken. And I'm now storing it on the Braun wallet. Now, something that I did notice is that Ledger is in the Canton ecosystem. So I haven't looked on my Ledger because I'm traveling if Canton is supported by a Ledger device. But definitely go check that out. If you go over to the Canton ecosystem and you look at the Canton ecosystem infograph, you can see here it says custody wallets, right? Here in this little section, you can see the bronze wallet there. You can see Fireblocks, Hydra, Zodia Custody, right? All these institutional custody providers, but Ledger sits right there. So I'm wondering if they aren't integrated with Ledger now, if in the future you will be able to utilize or store Canton on a Ledger device, which would be phenomenal. That's probably the choice that I'd go with for cold storage in the future if that is available. I, again, at this point in time, don't know if that option is available because I haven't been able to check due to my traveling. But go check that out. Definitely something interesting to pay attention to in the future. All right. Nonetheless, that is my breakdown for today. That was over like 20 freaking tabs. All of this information is available inside the private CYPRX research. This is honestly just scratching the surface of the information that is available in our Discord on Canton. As always, go and do your own personal research. There's still like 5 panel discussions that I have not watched yet that are available in our Discord on the co-founders of Digital Asset and the Canton Network that I'm going to try to get through over the next couple of days. But I hope that you guys enjoyed. I'll leave the floor open for open discussion as I see a lot more people have jumped onto this call.